Hey guys, this is Wave 618, 25th of July 2018, just gone 11:35 AM BST. Alright, so let's do an update on Bitcoin. Lots to discuss. Well, not a lot to be honest, but we certainly need an update because a lot has happened. And yeah, we're going to break down exactly what price is likely to do from this point. You can see I've got a few pitchforks on the chart here. We're going to explain those, a little bit about the wave count, and yeah, whether we've seen the end of this correction or is it going to go a little bit higher. We'll discuss that. Alright, so let's get started. First of all, as you all know, if you've been watching my videos, we've got our W, X, Y, X, Z wave count just plotted on the graph here, and yeah, so far so good. So it looks like it's following this downward trend. There was a little bit of excitement for the bulls up until this point, and I'm sure a lot of them are still very excited. However, I'm going to explain why their excitement will be coming to an end quite shortly. So because the bears are going to start showing their strength very, very soon. All right, so yeah, this pitchfork, so this is a shift pitchfork, and we're on the log chart, by the way, currently on the 4-hourly time frame. And so this is our W, this was our X. So this is where our three pivots are: first pivot, second pivot, third pivot. And you can see this pitchfork had its median line tested here, and now we're just testing this. Well, I think we may fall short of this warning line here, and I think potentially we could test this 1.75 line. This is the 1.75, this line here. The reason I say that, let's just go back to 2014. Similar play out. This is 2014 here. So we had our W, X, Y, and then the second X. Basically what it did, it came up and it didn't reach the warning line. It went up to the 1.75 and then came down. Did eventually test the warning line before coming down even further. Yeah, so what I'm saying is we don't have to reach this warning line. We could just max out at this 1.75, which is looking like what it's done now. Just while I'm looking at 2014, I'm going to pull up the moving averages. You can see that there was always a test of the 200-day moving average, and then it stayed below that. This is always a very important test, and likewise, we're just about to test that 200-day moving average. We're just shy of it at the moment. Whether we'll hit it to the point is hard to tell. Doesn't have to happen, but it's interesting. We're seeing a bit of an impulse move down right now on the shorter time frames, since we've got close to that 200-day moving average. So tested it here and testing it again now, and clearly the bears are just showing a bit more strength at this point. So just back on our 4-hourly, log chart. So let's keep the daily chart up there. Okay, so as I say, so on the longer term time frames, we're testing this 1.7. We may test this 1.75. There may be another small leg up. That said, we could have finished this retracement. Reason being is, if we do our fib retracement tool from here, looking at the previous high-low, so we're at the 0.618 right now. Okay, so we've hit that. That's clearly showing some resistance as well. So there's a few indicators here. There's the 200-day moving average, there's the 0.618 of the previous high-low, and then whether we might see a very small higher high up to the 1.75 line, possibly. Alternatively, it may just come down, then go sideways and test the 1.75 line. So it doesn't always have to go up to test this downward trending line. It could come down, but at a slower pace, and then move sideways and test it. So that's another possibility. And on top of that, we're going to zoom in now because you can see here I've drawn another pitchfork. You can see the lines going up here, and you can see we've tested the extremity of that also. So let's just see 4 hourly shows that nicely. Yeah, okay, 4 hourly chart. So I've got this as being a correction, WXY. So this was our W, and then expanded flat to make X, and then Y is looking like an A, B, C pattern. So that's how I've got it plotted out. It looks like a WXY. So we've got our 3 pivots for the pitchfork. For this one we did a Andrews pitchfork. So this was our first pivot, second pivot, third pivot, and you can see these lines are getting respected very nicely. Here the median line didn't hold at all, tested the lower median line, then it came up to the median line again, a little bit of a pause, completely broke through it, test of this upper median line before retracing a little bit and then continuing through it, and showed a really nice rebound at the upper warning line. So this pitchfork is being respected very, very nicely. The lines are acting as great resistance and support, hence why we came up to this point here. Now, I can't see us breaking out of this trend line, these trend lines. So what may happen, we could get potentially we could get another higher high. Coming up to, this is the 1.75 line on the big pitchfork we showed coming down. So we could get a move up to here, potentially. However, because we've hit the 0.618 retracement, that's not guaranteed. However, if we did come up to here, we would be testing that 200-day moving average. So, personally, I've put on a position, a short position, but my stop is above this point, so it's around 8,700 level. Purely because potentially it could make another leg up to here. That is possible. So yeah, that's how I'm looking at it. So pitchforks, really, really useful, as you can see. Generally, they show the trend. So once you've got your first 3 pivots in, so your first wave and your second wave, that's when you can plot your pitchfork. And you can see the lines are respected very nicely. They don't always tell you when to get in, when to get out, but they tell you once a line has been broken, very often it will progress to the next line. Yeah, and I wouldn't use pitchforks by themselves. Use other indicators. For example, here, this was good because it hit this upper warning line. You can see it's looking really overbought here. It's hit the 0.618 retracement of the previous high-low, and so that was a good position to short right there. Yeah, but using the pitchfork alone is not the best idea because price can keep going up and up and up along this line, and you'll just get your stops taken out each time. So pitchforks, they're useful, but need to be used with other indicators. Yeah, so I think in essence that sums up what I wanted to say. Obviously in my last video I gave 2 possible scenarios. I said a possible turnaround at 7,800, which we can see did not hold. So at that point it did show some resistance, which we expected. There was a good horizontal resistance at that line, but you can see price broke through it quite emphatically, and I'm quite glad that I gave that second scenario that could play out. Now, how is Bitcoin going to come down? What fashion? So there are various ways in which it can come down. First of all, as I say, I can't see it going up past 8,700. Yeah, it would be breaking the 200-day moving average. It would be breaking this these pitchforks, and moving averages and pitchforks is what trend traders use right now. Anyone who's trading the trend, who's bearish from here, will be getting very excited because they have been waiting all this time to find another place to short Bitcoin, and they can see that price is reaching the extremities of their trend, so they're going to get a great shorting opportunity very, very soon. So the shorts are going to get very, very strong around this point. So yeah, how is it going to play out? How is it going to come down? So there's various ways of labeling it. So here you can see it's a W, X, Y, X, and then I've drawn my Z down here. That's one way we can label it. An alternative way is if we put our Y wave here, X here, and then bring our Z across, and it could look something like that. Alternatively, it doesn't really matter. The point is it's going to come down from here. The only reason it's important to label it correctly is to determine how far it's going to come. Yeah, how low down, because we can project our targets based on the pattern that it's forming, whether it's a WXYXZ, or another way of looking at it, if we draw a horizontal line here, and now let's just draw a descending line, I think it's pretty clear to see that it's made what looks like a descending triangle here. So if I just make that a bit clearer, a descending triangle would be A, B, C, D, E. Now it's not completely regular in the sense that B wave didn't touch the horizontal bottom here. However, that said, only 4 of the points within the triangle have to hit the extremities of the pattern. So it's still valid, and with a triangle we often see a 0.618 retracement of the preceding wave, a minimum of 0.618. And so we've hit that 0.618 as I showed you earlier. We've hit that downward trend line. Yes, it's come out slightly, it has gone up slightly above the line, but for me, I'm very happy to call this a triangle. If it went above, if wave E went above wave C, that would invalidate the triangle. But until that happens, so what point, that's around $10,000. Until that happens, the triangle is still valid. Now, the reason that's interesting is because you can plot your target for where the bottom will be. So if we do a fib extension, if this is our W, and then the whole of this triangle could be an X wave, and I would predict, my target would be around the 0.382 extension of this W wave. So you can see we plot it, we extend it from the point that the triangle finishes, which would be at the end of wave E. So that would give a target of around 3,300. So that's one way of looking at it. As I said in previous videos, if this, we may just test this upper median line here, this line here. So it could come to around here. So yeah, that's just one way of looking at it. It's certainly looking like it could well be a triangle rather than a WXYXZ. It could be just a simple WXY. Yeah, so that's the other way of looking at it. Yeah, so just food for thought there, guys. Hope that's interesting for you. And yeah, so if we could just pull up a bit of volume as well. Let's have a look at that. So on our shorter time scales, sorry, I know the chart's looking a bit messy, especially when you've got all these different labeling patterns and our pitchforks. So yeah, reason 7800 was a target for a lot of people was because you can see really low volume on the volume at price here, the volume profiles. And when you see a transition between high volume and low volume, that is generally where you'll find horizontal resistance or support. So around here, it's all looking quite high volume, so it's very difficult to use the volume profiles alone to pick a horizontal line. There's a lot of volume involved in all this consolidation here, so we have to include other things other than volume. But as I say, it's hit that 0.618 retracement, it's hit that downward trend line. Sorry, on the log chart, it's a lot more clear. So it's hit that downward trend line. We're very close to the 200-day moving average, starting to show on the shorter time frame a bit of an impulse wave down. So it looks like that could be a 1.618 extension of wave 1. So yeah, we'll have to see how it plays out. As I say, my stop would be certainly above 8,700 because it could make another leg higher, but I can't see it going much higher at all. As I say, this short-term pattern, this WXY, has tested this upper trend line now. So plenty of reasons to go short right now. So yeah, I think that sums it up quite nicely. I hope that helps. All right, and yeah, we'll be keeping you updated. So yeah, if you're enjoying the content, please like, subscribe, share. You've been showing wonderful support so far. Channel's growing very nicely. All right, take care, guys.